Commodities play an essential role in everyday life. They're the building blocks of the global economy and usually thought of as naturally occurring products to be mined or extracted, like oil and copper, or crops to be harvested, like coffee and cotton. While we as individuals are impacted by commodity prices on a daily basis, commodities also play an essential role in investment portfolios, helping to create greater stability and provide protection in times when inflation uncertainty is high. Not only do commodities provide a positive real return over long periods of time and multiple business cycles, but they can also provide powerful inflation hedging properties, something that is generally missing from investment portfolios. In times of macroeconomic and inflation uncertainty, the correlation between stocks and bonds increases, limiting the benefit that bonds can provide to investment portfolios. An allocation to commodities can help improve portfolios by adding exposure to an asset class that does well when inflation is high, precisely the time that fixed income can underperform. Getting exposure to commodities can be tricky, and at Viewpoint, we believe the most efficient way is through the use of direct futures contracts on the underlying commodity, as opposed to buying stocks of companies that produce commodities. Equity investments in commodity producers can muddle the underlying commodity exposure with company-specific risks, potentially creating unintended consequences of higher exposure to equity market beta. Because exposure to single commodities can come with high price variability, or what is known as volatility, we at Viewpoint recommend a broadly diversified opportunity set to create a more stable risk profile through a wider range of commodity cycles. The Viewpoint strategy actively adjusts its commodity weightings based on underlying volatility and correlations, resulting in a better ability to harvest an inflation premium when commodities crash up due to supply or demand shocks. While exposure to commodities within an investment portfolio can be a benefit through all cycles, at Viewpoint, we believe we're entering a macroeconomic regime where deglobalization and supply chain diversification are creating new demand for raw materials at a time of record low investment and supply. On the demand side, deglobalization and increasingly protectionist policies will likely increase defense spending. Artificial intelligence and ongoing electrification will increase demand for base and industrial metals, while the desire for central banks to increase their reserve flexibility will lead to new demand in precious metals. On the supply side, the last decade of low commodity prices has resulted in an underinvestment of existing commodity supply, while origin concentration risks within the soft commodity space increases supply risk due to disorderly weather patterns. Our thesis is that this confluence of factors has initiated a new commodity supercycle,